All right, good morning, everybody. This is T from Focus Trades. Let's get ready for today's session, guys. So my brother Chandler is working with our day trade group right now. You guys can see it's about 7 o'clock in the morning, so they get started pretty early. As for me, guys, I'm going to hit y'all with a little bit of a big picture and swing trading view here of the market. So as y'all know, beautiful bounce, guys, in the market yesterday. And, here's what's kind of taken place, or seems like it's taken place over the last couple of days. Take a look here at the tech sector. We ran too far too fast here, guys. Starting last Friday, we started to see signs of profit taking in the tech stocks, right? So money's coming out of tech, and they were going into, all the oddball shit like industrials, energy, finance, transportations. So during the course of that rotation, guys, that led to the Qs here giving us that nice, healthy reversion to the mean, right? We get a little bit too extended, come on down to the 21. So as they're rotating out of tech, that pushes the Qs, guys, down to that nice reset at the 21 EMA. What we then saw, guys, on Tuesday was signs of them stopping that rotation, right? The sectors that were getting love, like industrials, energy, finance, etc., we even started to see signs of profit taking there. So going into yesterday's session, guys, knowing the Qs had made the pull back to the 21 and knowing that we were seeing signs of profit taking in all of the sectors, right? Because we got the S&P 500 here, and you got all these different sectors, guys. We knew heading into yesterday's session that, yesterday, they were selling everything. They're still selling tech, and now they're taking profits in industrials, energy, finance, taking profits in the things they've been rotating into. That brought us, guys, into yesterday morning with just a basic kind of mindset. We need to see them buying something today. They stopped the rotation. They haven't been buying tech names. If they don't buy something here today, guys, it's going to be difficult for the market to continue to push forward. And what we got yesterday, guys, was one hell of a beautiful bounce for tech here after that nice healthy reversion to the mean. So we look across the board and tech woke back up, right? Nice day here, guys, for Apple. Nice day here for Amazon, etc., etc. So remember that, guys. For the market to continue to move forward, one or two sectors has to step up and lead the way. The general theme this year has been that this whole damn rally is all about technology and all about the semiconductor stocks. So that's why, guys, as swing traders, as day traders, it's so important to get a feel of not only what is running the market right now, but what is the big money doing in those given names. So nice bounce back there, guys, to the market yesterday. And now the question is, does the trend continue? Right? It's kind of how you can look at the market trend here, guys. We run away from the 21. We run back. We typically tend to get the continuation. So we'll see if that's the next step here. We made a big run away from the 21, finally ran out of gas, got the healthy reversion to the mean. Do we get the continuation now back up towards the highs? So with all that being said, guys, let's briefly jump over a couple of setups that I'm focusing on at the moment and that I'm trading at the moment. So one setup, guys, and this is a smaller one, right? Not a very big setup, and that's a relative thing, of course, but a relatively small setup, guys, risking about $4,000 to make a little bit over 1,000. And this is just kind of, a nice, easy income trade. So you take a look here, guys, at Disney, and, we've made this big move up here, and now we've kind of gone sideways and ran out of gas. So you got a beautiful 4-hour squeeze. We got a 2-hour squeeze, and we got an hourly squeeze here, guys. So big move to the upside. Now you got multiple time frame squeezes here on Disney. So I'm not looking at this, guys, as something I want to swing trade for weeks on end. Rather, if the market's going to continue its pump here, I'm looking for a little bit of continuation in Disney, guys, as it potentially heads towards that gap fill level. So to kind of go for that continuation in a low stress fashion, I jumped in here yesterday, guys, got a put credit spread, short and puts down at 127. So I bought the 120, I sold the 127s, bought the 126. And all I'm doing here, guys, is short and puts underneath the bottom Bollinger Band, right? I'm looking for the continuation here. However, I'm just also looking to collect premium. So I'm going to collect that premium, guys, whether or not we actually break out and fire the squeeze. As long as we can hold above 127, going to be looking good. So the mouse is in the house. We'll see how Disney goes, and then Tesla. Tesla. So yesterday, guys, right, like I mentioned, we got the day trade group here, the TDG. Now, I'm not a day trader, so my brother focuses on this. But what was so cool, guys, yesterday was to see, the day traders, the swing traders, the scalpers, the option sellers, was to really see all of us as a family taking advantage of the big move in NVIDIA. You had your scalpers scalping it, your day traders day trading it, and then you had me coming in here selling some options. So Tesla, guys, has been in this daily squeeze for a couple of weeks now. And as we can see, it's done what we tend to see a stock do inside a daily squeeze, which is just chop back and forth in an ugly fashion, right? Getting a little bit sketchy there. News comes in yesterday, guys. We got a stock split coming on top of this. You got Battery Day coming up, which is a big event for Tesla. On top of that, there's a speculation, guys, that they're going to get included into the S&P 500. So you got a daily squeeze here. You got a daily squeeze underneath all-time highs with a bunch of catalysts behind you. That's something I'm liking to trade, right? If I'm going to lose my money, let me lose it on something like this. So the good news is, guys, if you didn't catch Tesla yesterday, the move hasn't really even started yet. We kind of faded off here for a few days, so that big gap kind of just brought us right back into the squeeze here. So technically, guys, the squeeze is not even close to firing yet, which means yesterday could have been just a heat up for Tesla. At the same time, we're in a daily squeeze. We can easily just drop right back down and continue to bang back and forth. But nonetheless, guys, we're building up energy. Pay close attention for that energy to get released. When you have catalysts, that could be positive, and you're squeezing under all-time highs, there's a good chance, guys, we might get a move here back up towards those highs coming out of the daily squeeze. So for me, guys, nice and simple. September expiration, I shorted the puts down at 1400. I bought the 1390s as protection, and I'm basically just banking, guys, on Tesla. Bare minimum, staying here inside the squeeze. Now, if we go and explode, that's awesome, but I'm giving it a little bit of flexibility. You buy the naked calls, you need the thing to continue. I'm selling puts at 1400. I just need the stock to keep its ass above 1400. So Tesla, Disney, 2 positions yesterday, guys. Smaller one in Disney, bit of a bigger position over here in Tesla. And then here's my last thought for you guys as far as another trade I'm looking for. If we do get the continuation in tech, right? So if things continue to kind of pump back up towards the highs here, guys, I'm looking for Google to do a little bit of catching up. So unlike Apple, Amazon, Facebook, Google guys kind of already got its nice healthy flush, and it's just kind of chilling here inside this daily squeeze. So what I'm liking, guys, is you got the 50 SMA down here. We're back above the 21. But to me, I'm more so looking at Google, guys, from the mindset of if tech continues to rally, expect Google to catch up a little bit. Really simple thought process, but that's the way I'm looking at it. If tech is going to continue here, probably going to bring Google with it. So with that being said, guys, I'm looking at something nice and simple here, right? Come out here, say to, give this thing 30, 40 days to expiration, and then, you kind of take your shots here. Go to September. Now, if y'all want to go with a naked call, I always suggest it in the monies, so you don't got to deal with that premium decay. They're definitely a little bit pricey, though, so depending on your account size, a $7,000, $8,000 option might not be appropriate. But if you are going to go swinging here, guys, naked, that'd be my advice. You start going with the out the monies, holding those for, 2-3 weeks, all you're doing is eating premium. So what I am thinking here, my friends, is, put credit spread, no shocker there. But then it's a matter of, guys, how far can we go out the money and get a decent risk reward, which is a subjective thing. Risk reward's always going to be different. But these are the things I'm going to start to look at here, guys, right? We'll come in here today, 1450. And, we're going to have to come in here, guys, at the open and see what these premiums are looking like, because we're not getting, an accurate representation right now. But nonetheless, guys, I know y'all understand the spreads, and if you don't, you're in the right place because we got plenty of content here. But yeah, guys, I'm looking for some continuation here, or some catch-up, rather, in Google. My preferred way to go about trading that, if that's what began to unfold, would be a put credit spread, shorting puts underneath this bottom Bollinger Band. And that's about it, guys, right? I'm focusing on my go-to setups, nothing else, and that's what led me to jump it into Tesla and to jump it into Disney yesterday. So Disney, Tesla, Google, all of them, guys, they're going to be dependent on the market continuing its climb forward. Now more than ever, as we can see, if you're paying attention to the market through this kind of big bird's eye view, we can see now, guys, more than ever, we need tech and semis. Right, that little bit of rotation, it only lasted for a couple of days. So you can see, guys, just how unwilling they are to make some kind of sustained, buying trend in the other sectors. And then we see how quick they are to jump back into tech and semis. So don't short this market. That's my only advice. Don't try shorting this shit. Take the path of least resistance, which for the time being, guys, seems to be to the upside. Right? Wait for the healthy pullbacks, just like I've done with tech here. Then look to take your shots. So looking forward to seeing what today brings us, guys. If we take a look here at the hourly charts, a little bit of pre-market, Tesla's looking steady, right? I just need her above 1400. Really nice paycheck coming if we stay above 1400. Tesla, Disney rather, looking solid. Just need it above 127. So I wish you guys the best of luck today. I will see y'all in the next video. If you haven't already, go ahead and subscribe. And then, guys, make sure y'all check us out on Instagram at Focus Trades. And then you can check us out, guys, at focustrades.com. Got a couple of free lessons here on the site. You guys can check out the group as well as the 20-week course coming up in just a few weeks here. And I think we've got about 7 spots left. So that's it, guys. Trade smart. Trade your plan. Love y'all. Talk to you in the next video.